Good evening, everyone. We'll just wait for people to join us from Facebook Live and from Zoom. This is Mindful Money's final seminar in our series, and welcome. So I think we're ready to go. Kia ora, ngā mihi nui kia koutou, ko Barry Coates aho, ko rangatira ki te putea whaiwhakaro, nau mai haere mai ki tēnei hui mariko. So good evening, I'm Barry Coates, I'm CEO of Mindful Money, and welcome to this online seminar. So for those of you who don't know, Mindful Money is a charity. We aim to make investment a force for good. And we'll put a short intro into the Zoom chat and Facebook comments to talk about what we do and to give you the URL for the website. Check out our website to see where your money is invested and find a more ethical fund, as we're going to talk about tonight. Quickly before we start, if you're on Zoom, can you put your questions in Zoom chat, and we'll pick them up and we'll address them during the seminar. And if you've got comments for Facebook Live, then put them in the comments section, and they'll be relayed through us. This is a short seminar, and we're going to be finished after about 7:40. Now, when we came up to our final session for the seminar series, I thought of a great host to kind of interview me and take the series out the door, and I could think of nobody better than Vincent Heeringa. Vincent is himself host of a really good seminar series, This Climate Business. He's co-founder of magazines including Ideologue, Stop Press, and Good, and he's founding chair of the Science Media Centre. He's won more than 30 media awards and published 11 books for AUT Media. So Vincent's recently joined the private equity and venture capital team at Unakaiki as venture advisor. So very warm welcome to you, Vincent.
Thanks, Barry. Nice to be here, and congratulations on the series. It's an impressive effort.
Not without pain.
Well, thanks for inviting me on to be host. And I guess, there's a lot to talk about, but I'm curious to know why you did it. What is the motivation behind the series?
Yeah, well, we started in April, just sort of having gone into lockdown, and we had planned to have a series of in-person events, and we couldn't. So we started saying, well, maybe we'll try 1 or 2 online seminars. And they went really well. They got a good reaction, and so we just continued and continued. So how
many altogether?
We reckon about 30, but I'm not sure that I've counted. Maybe 31.
Yeah, that's a fantastic effort, and weekly, right? So no let up.
We skipped 1 week, but otherwise weekly.
Wow, that's fantastic effort. So I think one of the things that I would like to know is, what are kind of the main issues, I suppose, that people are interested in when it comes to ethical investing? What are the priority areas for ethical investing, and not just from an investor point of view, but the people that run the funds as well? What are the issues, I suppose, the problems that are being addressed internationally with ethical investing?
Yeah, I've sorted out some little clips of videos to run through a few of these. We touched on a lot of subjects, as you would imagine in a series like this. And one of the areas is the traditional issues like alcohol. And in order to talk about alcohol, we invited an alcohol campaigner who is been particularly concerned about the impact of alcohol on Maori communities. And he gave us a great historical perspective. So let's maybe just hear a little clip from Rawiri Ratu.
Now, before I even go on, I'm not saying it's not about trying to stop people from drinking. You want to drink? Knock yourself out. What I'm saying is that the level of alcohol harm on my people is unjust and unequal. You tell me a situation where I think the figure was 56 or 57 licensed premises, which includes taverns and restaurants and bottle stores, 57 or 56 within a 1.5 kilometre radius of Otara shopping centre. You tell me, is that just? You tell me, is that fair? And that is what's happening in the poorer areas. We seem to have a proliferation of licensed premises. Now, you try a stunt like that down in Mission Bay or in Parnell, you're going to get railroaded out of there. Lickety split. So, in summary, alcohol harm and Māori has never ever been addressed.
I think that was a really great sort of reminder that many of these issues we might think that, well, I have a glass of wine, it's not too bad, but actually we don't always think through some of the public health issues and the injustice issues. And I think that was a really kind of powerful message to me for that alcohol seminar. There was other great data on pushing alcohol pops to kids and other abuses of power. So
and an entire industry dedicated to driving greater consumption of alcohol on an everyday basis.
Absolutely. There's another issue that has really come to the fore, and it comes out in annual surveys that we do of the New Zealand public. It's the issue of human rights in supply chains. And it often goes by the term modern slavery, which I think is a really nice reclaiming of the term slavery. So we invited a great panel for that, and we had somebody called Christina Stringer, who's kind of the leading researcher on this issue. She's at the University of Auckland, and here's what she said about some of the issues that can be affected by investment.
Now, over the last decade, I have been engaged in 3 major research projects into the exploitation of migrant workers here in Aotearoa, New Zealand. And so with colleagues, 10 years ago now, I researched labour and human rights abuses in the foreign charter vessel sector of the New Zealand fishing industry. And in particular, this was the exploitation of Indonesian migrant fishers working on South Korean vessels, which were fishing in New Zealand waters on behalf of New Zealand companies and quota holders. And here we identified extensive labour and human rights abuses. Following that research, I was approached by a coalition of NGOs who formed the Human Trafficking Research Coalition to commission empirical research into the exploitation of migrant workers in New Zealand. And so that was a 2-year project. And then most recently with colleagues, I undertook research on behalf of MB into the exploitation of temporary migrant workers. And that research fed into the extensive review that MB is undertaking into exploitation in New Zealand, and from which they've announced several key initiatives. As I reflected on those last 2 research projects, the project I undertook for MB and also the project I undertook for the coalition of NGOs, I asked myself the question, what is different? Has anything changed? And if anything, exploitation has continued to flourish and it's deepened in New Zealand, and increasingly the exploiters are becoming more creative.
So one of the things about that clip, and we went on to discuss it, is that essentially, this is not only something that can be dealt with via consumers. There's an investor response as well. And if you're an individual with a KiwiSaver fund or an investment fund, then actually, using the Mindful Money website, you can find out which are the companies involved in modern slavery, and you can avoid those companies. We have a category of companies that violate human rights. So these are the kind of issues that have real resonance across from the research across to an investment response. And the third one I just wanted to highlight was, of course, the defining issue of our time being climate change. And we had Minister for Climate Change, James Shaw, on the show. And James talked about the connection then between issues of action on climate change and investment practice. Here's what James had to say.
This is an area that I am particularly interested in because I do think that it is one of the single most important levers that we can pull in the transition to a zero carbon economy over the course of the coming decades. I'm very grateful to the work that Barry and the team at Mindful Money are doing as part of an ecosystem of organizations that are really helping to start to shift the financial flows away from the old economy and towards the new economy. It is an area that people are hungry for, and so it's convenient that we're pushing against an open door, but of course we are at a fairly early stage, and so people don't necessarily have the tools and the mechanisms to kind of get there. And so that's really, I think, the kind of role that I think we've been starting to play over the course of this last term, and that I really want to accelerate in the next term of government.
And of course, that clip was before the election, and James Shaw was reappointed Minister of Climate Change. So now he has the opportunity to carry on that work on climate change. And one of the key issues there is that now there is going to be disclosure on climate change impacts and vulnerabilities in supply chains that many of New Zealand's largest companies, but also many of New Zealand's funds, any fund that manages over $1 billion in their portfolio, they're going to have to report on these climate disclosure rules. So it suddenly brings a focus into what investors are doing about climate change, what they're doing to persuade companies to reduce their emissions, and what investors are doing to change their portfolios. So, for example, they might avoid investing in fossil fuels or particularly damaging companies from the climate perspective.
It's interesting just how there's a reach back into historic human rights issues such as slavery through to kind of current and future problems such as climate change. And the linking theme there has always been an industry that is slightly behind the scenes, not quite at the front line of human exploitation or environmental destruction, but I suppose an invisible force that could be for good or for bad. And what's different now, Barry, is sort of this level of transparency, I suppose, that organizations like yours are bringing. Is that the difference that's happening now, is the level of transparency?
Yeah, it's partly transparency, Vincent. I think also there has been an awakening, not only in a few ethical funds, but also more broadly in the industry, that actually they can't continue imagining that their financial kind of decisions have no consequence in the real world. So for a long time, the finance industry has operated as if there are no consequences, as if they can carry on, they can talk about risk and they can talk about return and all the financial metrics and ignore the impacts from the use of the money that they invest. Yeah. And now there is increasing understanding of that. And this is a process that's still working through. And the initial response from the financial sector is to manage the risks of these issues. So manage the financial risks on the basis that they can earn higher returns, but they're not always connecting it to the impacts of the decision. So it becomes an issue of financial risk, not of social cost or environmental damage. So that's the process that I guess in advocacy we're trying to push at the moment.
I wonder if we should have a look at some of the specific ways that, as an investor, what decisions you could make, what kind of perspectives or criteria you could use to start. You can't, it's difficult to take on all the world at once. So, is there a way of personalizing your interests? You might be interested in environmental, you might be interested in human rights, or treatment of children, for instance. Is there a way of bringing your own interests into this so that you can not boil the ocean?
Yeah, it is one of the things at Mindful Money we've tried to do with the way we've set up our website. When you go to find a fund that fits your values, we basically have a series of different values that you can prioritize. So you can basically tailor your choice of ethics to your own values and your own perspectives, and everyone's perspective is different. Maybe we can look at a couple of clips of how those differences play out. And one of them is we find that a lot of people who are most active on ethical investing are, of course, women, and they are driving much of the change internationally and in New Zealand in choosing where their money goes in ways that basically ask the questions around what kind of risks are involved here in terms of people and the environment, and what kind of companies are we investing in. And so there's, for example, a really strong women's movement around investing. We've got we did a fabulous seminar on this, and we've got a clip of Angela Mayer, who's from the Gender Justice Collective, and she's talking about basically a perspective of women on an investment, which I think is really illuminating.
And keep it brief. So we know that studies show that gender diversity on boards, for example, is a great predictor of long-term value creation and lower stock price volatility. We also know that women as investors on average tend to stay the course. They're less likely to be caught up in this idea of riding the market, and their investments are more lucrative and pay higher dividends. We also know that a lot of women are saying that we want jargon-free language in the information that banks are giving us. They want education about budgeting and how money works, easy to understand information about retirement savings. We know that women are retiring with significantly less in their retirement savings. And we also know that a lot of women, 72%, said that they want education and skills about money and finance. And this is really interesting to me because we also know that women are responsible for at least 80% of all purchasing decisions. So on the one hand, we have huge economic power, and on the other hand, we are very much disadvantaged in terms of access to financial knowledge and information.
So again, a great insight into some of the factors that make women-led investing a sound proposition financially, as well as in terms of equal opportunities, but also some of the disadvantages that women do face. And
I could imagine that if you increase the diversity of all fund managers, from ethnicity, sexuality, gender, you would actually increase the diversity also of I suppose the questioning and the criteria, that you get a much more representative perspective on where money should be put.
Yeah, that's true. We did a analysis of all the KiwiSaver funds. We've got a fabulous database on all the KiwiSaver funds. So we did an analysis of how many women are on basically the decision-making boards of these funds. And the answer was less than a third. So we certainly haven't seen enough women involved in funds in New Zealand.
Yeah. I know that you've also been a huge follower of the ESG movement, and this has had a profound effect on super funds in particular, right? There's just billions, if not trillions, being shifted from, I suppose, traditional or conventional funds into the so-called ESG funds. Can you tell us something about those?
Yeah, there's a huge movement. So it's around, I think the figures are mind-boggling. It's around $110 trillion of funds under management.
I don't even know what a trillion is, I don't think.
Yeah, 12 zeros.
Right.
So it's a large proportion of the total global funds under management. All sorts of big companies are involved. And they've all signed up to using these ESG measures or environment social governance measures in order to manage portfolios. And they've joined together in something called the Principles for Responsible Investment, or PRI. And it's a really powerful movement. So far, it should be said that many of these have still been at the stage of analysis. They're still looking at categorizing some of the risks that relate to social and environmental issues and governance issues.
Yeah.
But they haven't really fundamentally changed the portfolios of the companies that they invest in. And so what we see from the investment movement is often a lot of claims to be investing ethically, which aren't well justified and which don't stand up to real scrutiny. And so one of the things that is a theme through these seminars is trying to ensure that there are verification points and that actually the rhetoric is matched by the action.
Yeah, interesting. I know social housing is another area, Barry, that you wanted to highlight, and housing is so present, so prevalent, and in terms of an issue for New Zealand. Is there a way to use the capital of the likes of KiwiSaver or other funds to address the issue of, we're not going to get a capital gains tax through the investment community, but is there a way to use the capital in the property that, via our funds to affect better housing stock, more accessible, more affordable housing stock in New Zealand?
Yes, there is. And if you don't mind, I'll come to that in just a second. I just wanted to show you two quite short clips. One is, and it relates to this issue. It's around the alignment of investing for good or impact investing with the Maori worldview. And we have a clip here which talks about that alignment. I think it's a really powerful piece because it says many of the tenets of the impact investing world, the investment for good world, are actually reflecting what is common practice and has been for a very long time in the way Maori think about investing for the future. So the speaker here is Rangamarie Price from the Connective.
ESG doesn't actually tell you whether it's a good company or not. It just tells you that they're very good at managing their risks.
Sorry.
AAA rate, ESG company, but it could still have fossil fuels or could be doing stuff that's actually, not really great for the environment, for example.
Yeah, and there is it's an important point because I think this kind of in a way goes back to your issue about behaviors and the core values, and it's really great that Tahito is formed on the basis of values rather than just a kind of a modification of financial return. So it does give you quite a different perspective.
Yeah, and one of the things we had to prove in our development phase was that you could do this and still get a competitive return.
Yeah.
because I mean, otherwise it's just out there and it's airy.
Yeah, so sorry, that of course wasn't Rangimaharie. That was Temuera Hall, who has set up a fund which is reflecting a Maori view, a fund called Te Hito. So we had a couple of seminars that talked about those issues. I thought we'd move on to talk a little bit more about that issue of ESG engagement, Vincent. So we've got a thread that is run through the seminar, and it's around how funds will invest ethically. And we're going to move on to talk about this area of ESG engagement, and it's just worthwhile talking a little bit about it first. For an ethical fund, they basically have two major strategies in investing ethically. One is to avoid stuff, which is, I'm not going to invest in fossil fuels, I'm not going to invest in weapons or companies that violate human rights. And that's one way of investing. And that is common for some funds. Most funds at least avoid some things like tobacco or kind of particularly bad weapons like cluster bombs, which are illegal anyway. But then there's a second way of doing an investment strategy for ethics, and that's via doing analysis of those environment, social, and governance factors, and then avoiding the worst companies and engaging with companies in order to improve their performance. And we've got an interesting clip here from AMP Capital. And my colleague Amy's going to find this clip, hopefully, and we'll hear from Rebekah Swan around some of the examples that AMP Capital has used, where not only have they engaged with companies, but rather unusually for these fund providers, she's given some context as to what happened next and the outcome of that engagement. So let's have a listen to what Rebekah has to say.
I think for our clients and for our investors, like I said before, this is the part that brings it to life. When they choose to put their money into a fund that's doing things differently and investing ethically, they want to understand what it is that we're doing on their behalf. So I thought it would be fun actually just to go back over the last 15 years and look at some of the things that we've made a difference on through the engagement that we've done. And this has not just been through us directly, it's also been through joint collaboration with other like-minded investors. And these are some of the things that I found. So in 2006, one of our fund managers discovered that Toyota was using slave labor in its supply chain and started lobbying for change. On the back of that, the US government started investigating and the company's behavior changed. In 2011, one of our own ESG analysts went to Bangladesh and witnessed firsthand human rights abuses in factories that Australian companies were using to make clothing. And so we brought the issue to the attention of the local investment community and called for change. And now, as some of you may be aware, we've got the Modern Slavery Act, which is now forcing Australian companies and New Zealand companies operating in Australia to understand where they are buying from and what their supply chain is and how the workers in those factories are treated. So now we're part of a global investor coalition demanding that factory workers are paid enough to get them above the poverty line, so making a change with regards to social issues. And we've also done some work on payday lenders. So often, these people are lending to people who are the most vulnerable socially. We questioned the big banks as to whether any of them were funding this sector, and one of them was. We asked them to stop, and they did. So now that makes it much more difficult for people like cash converters in the world to run their business.
So one of the reasons, Vincent, that we did this series was to try to kind of educate people around what responsible investing is. And I think that thread of different ways to achieve the outcome is a really important learning point, because for most people, they understand the avoidance stuff. They don't always understand that these investment funds can actually help achieve change via engagement. So I think that was a really useful input there, and we did a number of seminars around that theme.
Yeah, it's great to hear that actually it works. You know, we are so focused on the returns to our ROI in terms of the return on investment, but what about the return on impact? And wasn't it great to hear actual live examples of it working in practice?
Yeah, we did a segment of the series on impact investing, because many people are really interested in it, and it obviously is an area where there is a very direct link between your investment and social good. And one of the examples that we wanted to highlight was a particular social bond, which was a way to finance the Salvation Army into building social housing. And the key to it was this isn't the first time that there's been support for social housing, but it is the first time that there's been a mainstream funding through KiwiSaver Fund for social housing in New Zealand. So we had on the call Sam Goldwater, who's CEO of Generate KiwiSaver, and they were the ones who basically mainstream the funding for social housing. So let's hear what Sam had to say.
So I guess the primary role of Generate's investment team is to provide a great risk-adjusted return on our members' hard-earned dollars. But if we can do that whilst also making a positive social or environmental impact, then why on earth wouldn't we? And this is exactly what the Salvation Army bond offered. The return from the bond is competitive compared to where New Zealand corporates have recently been issuing bonds. And the positive social impact from these housing developments is hard to overstate. So over the years, we've made various impact investments into the renewable energy sector, which have not only been excellent investments, but have allowed Generate to make a small contribution towards dealing with one of the world's greatest challenges, that of decarbonisation.
So I think that's it's a good way to be able to draw the link between kind of where people's KiwiSaver funds goes and the kind of funding that could become more prevalent, where KiwiSaver funds are actually going into projects that people get excited by and that generate real benefits.
We are going to ask Amy to see if she can bring up Sir Jonathan Porritt clip. And the reason for asking that, Barry, is because I sense that, you know, investing is sort of it's an older person's game. You know, by the time you've reached your fine age of having disposable income, you can think about investing. But, you know, so much energy for social good and environmental action comes from youth. And so Jonathan had an interesting point of view about the way that youth can be engaged in social good and social investment.
Yeah, this clip is a particular example. It isn't only about investment, but I think it's really good on strategies for change that Jonathan talks a lot about in his latest book, Hope and Hell. And he talks about his transition from kind of international advisor to governments and big corporations, and how he is going to be working with youth in order to raise the urgency of climate change. So, Amy, do you want to just play a second?
I retained lots of images from 2019, but one in particular, when the Sunrise Movement in the USA, a young organization, young person's organization, school strikes, etc., went to visit Nancy Pelosi, the Democratic leader in Congress, and effectively occupied her office. And Nancy Pelosi tried and tested politician going back many decades. Most of her instincts are progressive and good. She is utterly useless on anything to do with climate change. And these young people took possession of her office and just sat there and said, look, this is not good enough. Either you and the Democratic Party get going on this agenda properly, or we are going to have to find different ways politically of making that happen. Now, of course, they lifted their occupation after a while. An interesting conversation unfolded. Nancy Pelosi was fascinatingly patronizing and out there looking, for me, humiliated by this. But I read that symbolically. I think we're going to need the offices of politicians the world over occupied by young people in country after country until such time as politicians raise their game. I'm using occupied a bit metaphorically there rather than necessarily physically, but essentially that's what the pressure's got to look like. And for me, as an oldie in this area, I know that part of my job is going to be to work with and support young people as they bring that pressure to bear on politicians.
And the counterpart of occupying for the on climate change for the finance sector is actually young people who are now becoming active on investment issues. And one of the reasons why this is important is that we're undergoing the largest transfer of wealth that the world has ever seen from the older generation to the younger generation. And it's making a huge impact in the investment world, particularly internationally, but I think that's also a process starting in New Zealand. And those who want to be active on issues like climate change can apply that activism not only in occupying politicians' offices, but in terms of shifting their KiwiSaver, in terms of being active in convincing funds and fund managers to basically invest in ways that will fund solutions to issues like climate change rather than continuing to fund the problem and more fossil fuels, more emissions. So I think it's a nice clip from Jonathan. And maybe just the last thing, Jonathan was a prime mover in something called the Sustainable Finance Forum. And they've just delivered the final report of Sustainable Finance Forum. We had a number of seminars about that, and that's a really important process for taking the issues of sustainable finance forward in New Zealand. So I think there is a real momentum building around this, and we can look forward to a lot of opportunities for change if we get active and if we get engaged.
I think it's so exciting to shift the conversation from using consumption as a weapon to change to using your KiwiSaver. And it's quite empowering for young people. I noticed it amongst my own kids who are now starting to build up sizable KiwiSaver funds, and the sort of it's dawning on them that this is a that they could use this effectively as a weapon for good. So that's quite an exciting move, and mindful money is such a terrific tool in that regard. So I think we really need to wrap up here, Barry. But the choice about how do you actually go about making the decision? And I'm curious to know how could we use mindful money in particular, but also how do we use I suppose what decision making process could we go through to make that change in our own investment portfolio?
Yeah, we have a lot of information on the Mindful Money platform and www.mindfulmoney.nz. And what that information does is it enables you to find out what's in your KiwiSaver or your investment fund. And when you do, you can look at the kind of companies that you're investing in, look at the track record of the providers, and say, is this the kind of fund, the kind of portfolio where I want to put my money? And if not, we've got a fund finder that helps you find a more ethical fund. A lot of this is around transparency And we've got a little clip from one of the leaders from the ethical investment movement in New Zealand, John Berry from CareSaver, which is a KiwiSaver fund. He also runs Pathfinder. So this is what John Berry had to say also about the role of mindful money.
If we look long term for the world we're leaving our children, our grandchildren, we think climate change is by far the greatest challenge for humanity. And so we've constructed our portfolio around that by not only measuring the carbon intensity of all companies we invest in, but also avoiding all fossil fuel companies, which is coal, oil and gas companies. So yeah, we have completely excluded them. And Barry, can I just expand on one thing you mentioned there, which was using the mindful money tool to help people decide what works for them. And a lot of people ask me, what should a fund manager have ethically in their fund? And my answer is, we're in this wonderful position of we've got over 30 providers in KiwiSaver, all have different views. And at one extreme, there are people that are quite happy to say, tobacco, if it makes money, it doesn't. It's been really poorly performing. But if they believe tobacco makes money, if you use cigarettes as a manufacturer requires or recommends, you will kill yourself, people are happy to invest in that and make money. There are KiwiSavers that will do that. There are KiwiSavers investing in tobacco. We're at the other extreme. We aspire to be the most ethical KiwiSaver fund. And there's a full spectrum of offerings. And I think it's fantastic for investors to be able to find and choose what works for them. And the key thing is, firstly, providers like ourselves being really open on what we do and don't invest in, but also tools like Mindful Money, which is just offers wonderful transparency for people to help them find what works for their own personal values. So good work, Barry. Keep it up.
I think he had the last word, which is fantastic. So Barry, the series has wrapped up. Well done on getting to 30 or 31. You've lost count. What should we be thinking about over summer?
I think we should all be thinking about how we can take action on climate change and how we can address the multiple crises in our world, the crisis of inequality, the crisis of loss of biodiversity. There is a lot that we can should be doing, and increasingly, as you said, Vincent, it's not just about what you buy; it's about how you use your money. And there's a lovely study from Scandinavia that showed that actually when you use your funds more effectively, when you use your funds ethically, it has a much greater impact than a whole lot of other things that you can do. Going vegan, or not flying on planes, or not traveling by car. Actually, what you do with your money is a very, very powerful act. And I think that when people realize that we can get the message out, we'd love anyone who's engaged with this to tell others. As a small charity, we're still trying to get the message out. We're trying to build a movement, that makes money a force for good in New Zealand. And we're looking at spreading that message wider. So, have a great holiday, everyone. And we'll be back in 2021 with another Mindful Money seminar series. We've got lots of plans, and people are suggesting all sorts of things. So we'll definitely be in touch. Join the mailing list if you haven't done so for Mindful Money, and we'll let you know what's coming up. I've got lots of plans, and also go and have a look on the Mindful Money website at all of the full array of these wonderful 30+ seminars. There are YouTube videos of them, some really great ones there.
Great. Thanks, Barry. And is it too early to say Merry Christmas? Anyway, I've said it. And nohora. Thank you, everyone, for joining us on this seminar and for joining us over the last few weeks, months even. And thanks, Barry and team, for an incredible effort with not just the seminar, but Mindful Money. I'm with John Berry. Good on you.
Thanks very much, Vincent.
Thank you.
Ka kite anō.